Hello, this is going to be an exciting study on SPY. The chart is a lifetime chart of SPY, and my goal is to see if we can find where the likely bottom going to be. Let me get to the charts. This is the monthly chart of SPY going all the way back to 1993 until the all-time high few months back. So in this you can see there's one drop here, which is the dot-com crash in 2000, and this is much more brutal housing crash in 2007 2008, the small crack in COVID. This could have been much worse if not for the trillions of dollars of bailouts that followed. And this is relatively sharp cracks that followed after the Fed said the inflation is higher. The market did not like that. But since then, it has been on a parabolic path literally. And that is surprising for a index like SPY, which has trillions and trillions of dollars behind it. Now it's going down. We will see where we are right now using a fib level. So the fib says it is right now we just stopped around 78 fib and then chopping around there, which is 492. But this does not help. Lifetime chart does not help because everything changed with COVID. I'm going to use COVID as a new benchmark. So let me draw a high versus low with COVID, and if you notice it, it is just below 78, and the 61 fib is 462. So if the crack continues, this is where it's likely to go next. So I'm going to remove this and let us focus on the dot-com crash. So let me draw a fib between this and the previous time to see how deep it went. So if you look at it, it went all the way to 38 fib of the previous rallies. This is very interesting. So if you look at it, you don't need all the lines, but from the previous pair, the first crack that happened, it dropped all the way to 38 fib, and then it reversed all the way. I'm going to remove that all the way to the next crack was the housing recession. So I'm going to draw a fib level between at a drawing the previous the high before housing market and the low, and see how deep did it go. And that was really deep. It went almost all the way to 0 fib. So the previous time it was 38 fib during dot-com crash, and then in this time it was a 0 fib. So let me remove that lines, and then it was pretty much smooth sailing. And I want to let you viewers know, look at this, there was a long path of nothing. Let me draw that line to show. See, from here technically if you draw a line at a drawing and draw a line here, even though there was big moves and everything until about 2012 2013, it was pretty flat market when the bounce started, and since then it has been going up. So what changed in 2012 when housing cracks happened? We central banks around the world started making the money printing, quantitative easing, and fancy words a state of the art. It started in Bush's late years, Obama, Biden, Trump, everyone used that, and that money printing is what has literally taken this charts from here all the way parabolically up. Very, very favorable terms from central banks. of easy money. And I mean, they could have just given all sorts of other excuses like technology gains and everything, but underlying that was a lot of money slushing around that was throwing it onto Mag 7s and real estate and everything. That I mean, we can go into the political arguments, but as for a common man, he didn't see much gains, even though the stock market had a relentless gain. Just something to keep in mind. It was around 2012, 2013, although it started way before. I mean, the benefits of it took a while and then it shot up. So this one took about 2 years, this one, and this one was like 10 months. But let me draw a fib level between this one and COVID. And if we are drawing, if it goes to 338 fib, just like in 2000, dot-com crash, we are talking of 367. And if it is going towards the housing crash, then we are talking about 214. And either way, 462 looks very, very reasonable. And these things took 2 years to wind its way down. And this also took 2 years to wind its way down. And we are only into 4 months into this. So there could be news about Japan signing a trade deal, or China eventually coming to sign trade deal and everything. But the longer term, like monthly charts, smooths out all those issues, and basically it's a rough reflection of the economy, and that seems to be not doing well. So once it breaks the 78 fib, which is about 529, 530, the next one is 462, and I will not be surprised if it can follow any of these things and go all the way to 38 fib. So we have some more pain left. Trading is a difficult pursuit. If someone tells you or makes you feel that making money in the stock market is easy, be cautious. It is a skill, and like any valuable skill, trading must be learned, practiced, and refined over time. That's exactly why I created this web-based training program. You can learn at your own pace, and I have packed it with every tool and strategy I have personally used, when to use, how to apply, and when they work, etc. Check out the link below. I know how difficult it is to be unguided in the stock market. It is frustrating, and you learn with expensive losses. Take a look, and if it is not right for you, there's a full money back guarantee. Try the coupon code YouTube that drops price to less than $100. I trust and I promise it will be a useful tool. Thank you.